Tonight on Top Story, Ghana's economy is on high alert as the country braces for the impact of the U.S.-Israel war. We have details as the Energy Committee in Parliament braces for an emergency meeting with the National Petroleum Authority.
My chairman has just intimated to me that it's likely we are going to have an emergency meeting with the power players. In the industry, NPA, I'm sure is going to be summoned by Tuesday or Wednesday. Come and lead the committee alongside the Ministry of Energy.
We have details here on Top Story. Top Story, as always, is brought to you by Telecel, connecting energies and holy insecticide spray and coil. Enjoy a holy sleep. My name is Fostina Sarfo. Please stay for details. Tonight, Ghana's economy is on edge as global oil prices surge due to escalating tensions between the U.S., Israel and Iran. The conflict threatens to disrupt oil supplies through the Strait of Hormuz, a vital shipping route carrying 20% of the world's oil and gas. Ghana, an oil importing country, is vulnerable to price shocks, and the National Petroleum Authority acknowledges that the country can't escape global price fluctuations. The NPA assures Ghanaians that fuel reserves are sufficient for several weeks, but Parliament's Energy Commission is taking precautions, scheduling an emergency meeting with stakeholders to mitigate the impact of rising fuel prices. Let's listen to NPA's Director of Economic Regulation and Planning, Abbas Ibrahim Tasunti.
Definitely, with such a war happening and the impact it has on the global oil market, consumers and all stakeholders will be concerned about whether Ghana will be affected. As we've said, Ghana will definitely be affected, just like any other country in the world. So the focus will be what plans we have in place to ensure that consumers do not lack fuel for the economy to run. So as you asked, what is Ghana's current stock level of petroleum products? As of last Friday, we have diesel stocks to last us over 5 weeks. Roughly, it will last us up to 5.3 weeks. And then for petrol, we have almost 7 weeks, 6.8 weeks to last. And this is something that we monitor all the time. If you know that for a country like Ghana, which is a net importer, even without this war, we always ensure that we have a plan to make petroleum products available for consumers in the country. And so this is not something that is being done because of the war, but it's something we do on the regular. It's one of NPA's major mandates to ensure that petroleum products are always available. So as of Friday, like you said, the last monitoring that we did, petrol again will last us up to almost 7 weeks, 6.8 weeks, and diesel will last us about 5.3 weeks. But just to add that this does not mean that we don't have imports coming in. We discharge petroleum products almost every day in this country. So we have a plan where almost every day discharge of petroleum products have been done. That's for the imported products. We also have the Central Oil Refinery, which is consistently producing. It has been doing so since June last year, June 2025. And as we speak, they are producing on a daily basis and putting petroleum products on the market. The Atuabo gas processing plant is also producing and putting LPG on the market. So in terms of stocks, whilst we consume what is incoming, we have a plan of imports for import as well. We have about 4 vessels at the anchorage as we speak in Tema, which are waiting to discharge 2 cargoes for diesel and 2 cargoes for petrol, and other imports are also scheduled to come in. So for now, to answer your question directly, we have products to last in the country for almost 6 and 7 weeks for petrol and diesel and petrol respectively.
Well, Parliament is not taking chances despite the assurances. The Deputy Ranking Member on the Energy Committee, Collins Adumako Mensah, tells Joy News the committee will hold an emergency meeting with EPA, NPA and key stakeholders to review measures to reduce the potential impact of rising fuel prices on Ghanaians.
My chairman has just intimated to me that it's likely we are going to have an emergency meeting with the power players, with the players in the industry. NPA, I'm sure, is going to be summoned by Tuesday or Wednesday. the Economic Leader Committee alongside the Ministry of Energy to come and explain to us what this whole law means to us. And the question you put to me, I'm sure I'm going to put the same question to them when they come to us. They are the technical people. They should explain to us what the implications are, although we have a fair idea that is going to lead to some price increases. This brings to the fore the issue about Tor, and I'm excited that Tor is now running. I mean, not at the full capacity, but it has started some operations. We have to have a very serious policy discussion. Oil producers, we produce oil now in Ghana. What do we do in situations like this? Can we, as a matter of urgency, have a meeting with them to see whether we can quickly refine quite a number of it here in Ghana so we can be assured of some supply? These are all policy direction that must be taken by the ministry.
Well, Ghana has faced similar oil price volatility before, and experts warn that without structural changes, history could repeat itself. The country's reliance on imported refined petroleum products makes it susceptible to global price changes affecting transportation, food, and essential services. Let's get the latest update on the situation from our research team. They've been doing some digging. Caleb Zibling joins me in the studio with more. Let's appreciate the root cause of what is driving the current surge in global oil prices.
Yes, Fostina. So as we speak now, the price of a barrel of Brent crude, and Brent crude is based as usually the benchmark price of crude on the international markets. So currently the price is $77 per barrel. We ended Friday, that was before the attack, at $72 per barrel, and we are currently doing $77 per barrel. That's an additional $5 per barrel. Because the conflict is happening now in the Middle East, where about 30% of global oil production takes place, the uncertainty is causing the spike in oil prices as we are seeing. Again, Iran has also effectively blocked the Strait of Hormuz, where about 20% of total oil production passes through. And again, because the United States is involved in this, the Iranians are targeting U.S. bases in most of the other Middle Eastern countries. And then we have confirmed attacks from the Iranians in Kuwait, Bahrain, Qatar, UAE, and Saudi Arabia. And then, in fact, earlier today, the Iranians hit part of a Qatari LNG processing plant, which has caused the price of natural gas in parts of Europe to spike. Again, the Iranians are doing this because one, they are able to cause other parts of the world to feel the impact of the ongoing unrest in the Middle East. They are hoping that this will cause pressure to pile on the U.S. and then prevent the U.S. from escalating the matters further. So as we speak now, the price of Brent crude on international markets is $77. We peaked around $78, almost $80 earlier today, but then it seems that the prices are now easing a bit. So that's good news for Ghana.
Indeed. And how long is this likely to last?
Yeah, so the duration of the unrest is very significant. If this happens for a protracted time, for 2 to 3 weeks, we can see that the price of crude is going to go up significantly. Again, last year in 2025, the US together with Israel struck Iran again, and then oil prices spiked up, but then a few days later it came down, and then the unrest in the Middle East faded. So Ghana did not feel the impact in 2025. But then this year, if the unrest or the conflict escalates further and goes beyond a week or two, that's when the oil traders and markets are going to realize that the price of crude oil, they are not taking significant advantage of the fact that the price has not gone up significantly. So traders and oil marketers will start increasing the price up dramatically, and that's why we can see price of crude oil going from the current highs of $77 to as high as $80 per barrel, 90, or even cross the $100 per barrel mark. So if the war escalates beyond a week or two, that's when we should see the price of crude oil on the markets going up significantly. But as we speak now, the price is $77 per barrel, and because of the strength of Ghana's currency, we're in a somewhat comfortable position.
And then how will this even affect price of fuel at the pumps here in Ghana?
Okay, so before the attack happened on Saturday, the price of crude oil on the international markets was already going up. And then we heard on Friday, again, that was before the attack happened, that COPEC and the OMCs were going to increase the price of petrol in the Ghanaian markets by about 3 to 5%. Today, when the pricing window opened, that happened. The price of fuel increased a bit. I think gold is doing about 11 cedis for petrol and 12 cedis for diesel. the price of fuel increased today, not because of what's happening in the Middle East, but then because the price of petroleum products on the market were already going up. So currently, we are not feeling the impacts. We're not feeling the impacts of the unrest in the Middle East. What's happening is that the price of crude was already going up, which is why the price of petroleum products in Ghana increased today. Now, going forward, if the if Ghana's cedi does not remain strong against the dollar or it weakens, currently the cedi is doing 10 cedis, 70 pesos to $1. If the cedi slips a bit and goes to 11 or 12 cedis, that's where we're going to feel the impacts heavily. But then currently, because our cedi is doing very well, currently trading at 10 cedis, 70 pesos, even though crude oil prices are going up a bit, the impact is minimal. So what's currently holding Ghana down is the fact that our currency is doing very well. And again, crude oil prices have not gone out of control yet. We're currently doing $77 per barrel, and the cedi is doing 10 cedis, 70 pesos to $1.
Thank you so much, Caleb, for that update. Thanks for staying with us here on Top Story. Let me bring in now the CEO of the Chamber of Oil Marketing Companies, Dr. Riverson Opong. We appreciate your time here on Top Story. Later, we'll also be speaking to industry players. I'd just like to start with your reaction. We've been hearing from the NPA. They say that Ghana has enough fuel in our reserves to last us a couple of weeks. But from your industry data, how accurate is this assessment?
Right. Good evening and thanks for having me here. I think it depends on where we look at the impact of this war. I was able to listen to the previous speaker with the questions you were asking him. I think I'm happy with the focus he went into the pricing because when it comes to availability of fuel, Ghana will not, or worst case scenario, may not be affected with availability of fuel, since we do not have we don't have any fuel coming from that Gulf of or the Strait of Hormuz. Most of our products come from the western corridors of the oil and gas market, and the worst scenario of probably 10-20% coming from the Abu Dhabi and Kazakhstan will surely come from the southern hemisphere. However, why we are worried is not necessarily, like I said, the availability of fuel, but because of the international benchmark prices that are going to skype up. We are lucky to be operating with a bi-monthly kind of pricing and selling regime, i.e., we had the strike between Iran and Israel some time back last year, but we didn't have any impact here in the country within that 2 weeks because we had already priced that window, and that's the same thing we are seeing here. The window where we are in now, which is from 1st to 15th of March, has already been priced. And if this war persists, and with the rate at which the crude oil prices are going up, unless OPEC steps in and produce more, probably we're going to see fuel prices scaling up even above the $90 per barrel that has been forecasted. And automatically, that will also impact on the refined product prices.
And how soon
also
should we
because
expect this, especially with what you're telling us, especially with global crude prices rising? How soon will it be reflecting in our pumps?
Right, I think that's where I was going. So, if you look at how we've priced for this window, we expect to have a selling window for the next window from the 16th to the 31st of March. pretty soon. All right. So the effect of what we see jumping from 70 to 89 today will not be this week or even next week. All right, and that will be seen on the pumps in a couple of weeks to come. By then, we hope that the war might have been extinguished, and therefore the impact will not be so much hefty on our continent.
But
See, there's Dangote here in Nigeria, okay, who can supply Ghana easily, no doubt. But the issue of pricing, which takes care of the affordability in the 3 A's, that is the availability, accessibility, and then affordability. All right, but Dangote will not choose to sell cheaper to Ghana because we are neighbors, because it's still going to sell at the price the world market will determine. So I think the focus here should not necessarily be availability of fuel, because probably like what MPA said, we have every Monday and Tuesday stock levels in all the tank farms. Okay. Even if all the tank farms in this country is full with fuel, all right, it cannot take us for 10 weeks. Look at the demand that we have today, all right. So we need to be discussing, in case the price go up, what should we do to make sure that the ordinary Ghanaian can still afford fuel?
But as oil marketing companies, are you already adjusting your pricing models, or will you hold steady for now?
Yeah, so we have already entered a new pricing regime, okay? We started from the 1st of March and ending on the 15th of March. That regime is meant to be stable till the 15th of March, unless, to be sure, crude oil price hit above $100 and the Platts prices also increase enormously. Other than that, believe me, we're going to have a stable price from now to the end of 15th of March.
And we're wondering, if this conflict persists, we have to be looking at alternatives. And it's interesting you make mention of Nigeria. Do we already have that established relationship with them, especially looking at what we're expecting in the coming days?
Oh yes, we have received crude oil products from Nigeria, and like I always say, the kind of traders we have in the western coast of the country are very solid enough to trade from everywhere. I'm talking about the likes of Victor, Trafigura, Blues. I mean, name them. Quite solid guys here, and we have already received diesel and petrol from Dangote refinery to the country. Remember, unfortunately, we depend 80 to 90% all the time, as far as the oil and gas market is concerned, on the individual investors or corporate entities, not government. So these traders already have arrangement with Dangote refinery, just as they have with other refineries. It is very sad to see that 550,000 barrel per day capacity of crude oil refinery in Saudi Arabia has been shut down today. That is going to increase the demand and obviously affecting price.
I see. And then just looking at the situation we have in our hands, there are concerns that they may be panic buying by consumers as they anticipate the price increment. Do you know, as we speak, the percentage increment that we're likely to see in coming days?
So we can only predict based on today's data, okay? And I always advise politicians, advocates like myself to desist of causing panics around pricing, okay? Especially with crude oil and its products. We have had a regime or a window where crude oil price went up, but Platts prices came down, which is not the case. So it's also not always the case that crude oil prices go up and Platts prices also go up. And when we talk about Platts price, I mean the diesel and petrol prices, okay? It's always not compulsory like that. We've seen it. And if you go to our website, Comac website, download all our by weekly reports, you see it there that crude oil price went up, but diesel came down. Even though, in actual sense, it should move in the same direction. That's how it should be, but it's not always the case. All right. So, in today's terms, where we've seen that crude oil has increased by Brent of 10% and 9% of WTI. If you look at the SREF component of our S pump, which is 70%, if you assume that that component will increase by 7%, that means that the overall percentage of increase that we are looking at 100% wholesome should be 5%, no more. All right, that is as of today's information. You can only predict when you have data. And until you have data, please, let's not move. And again, like I said, the windows we have here entreat us to sell at the price the window has set.
Okay.
All right?
Okay.
So I believe that fuel price will not jump up or anybody will prevent selling to wait for the next window where prices will go up. We are selling. I mean, go to all the stations. They're all selling and everybody's happy.
Okay, let me bring in Benjamin Wachi, he's Executive Director for Africa Center for Energy Policy. We appreciate your time here on Top Story. But just looking at this conflict, should it even stay longer than we envisage as a country, how will this impact our economy?
Thanks for having me. I think definitely the impact will be great if it persists, because already we're seeing almost 8% jump on the international oil price. And if the conflict escalates, then of course you could expect that the price will go higher. And as they go higher, the industry will pass through, as you heard from Comac, because for them, they will want to recover their costs unless there's some intervention from government on the taxes component. And even that has a limit to what the government can do when prices escalate beyond a certain margin. Yeah, so we can only hope that it doesn't escalate and we can see some resolution to the conflict and will ease the pressure on the market and allow the consumers to enjoy the rates that they're enjoying currently. But if it escalates, certainly we could see prices go up.
What early signs should we be monitoring to see over the next few weeks?
It's actually in the hands of the U.S., Israel, and Iran. They are the ones who are fighting. We don't even know what the strategy is for this conflict. So it's difficult for anybody to actually predict how things are going to pan out. I mean, all of us thought that there were negotiations, people were around the table discussing, a peaceful resolution to this situation. All of a sudden, we had bombs flying, people dying. So it's difficult for me to sit in Accra and predict what could happen. But we can only hope that it doesn't escalate beyond, a certain level that put pressure on the global economy, including Ghana.
And there are already concerns that we should start looking at our counterparts in Nigeria for supply. We hope to mitigate the impact on fuel prices at the pumps. Your thoughts?
If you are looking at Nigeria, it is only supply security dimension that you will be looking at. You are not looking at cost dimension because it's a global market and the market is fairly determined on a daily basis. So you're not going to get Nigeria selling their products to you at a cheaper price below what the global market is dictating. In fact, Ghana that produces oil is not going to sell its oil cheaper than what the global market is actually throwing at all of us. So you can have those arrangements to make sure that we can secure supply, but you cannot freeze the cost of the product to a greater extent. At this point, even if you want to trade forward, I mean, all those who are engaged in the market will also be anticipating a higher premium for it. So it's difficult for you to even smoothen the curve for a longer period of time. So we just have to brace ourselves and make sure that, and hope actually, that the war doesn't escalate in a manner that throws oil price back to the $100 regime.
Well, in the long term, people are actually proposing that we should invest in domestic refining capacity here in Ghana, especially with just weeks back we heard from government that Tema oil refinery is back on track. Your thoughts on how we can sustain the gains?
I think all of those dynamics impacts the supply security, but as I indicated, one is the price is determined on the international market. You're not going to trade below that unless you produce in excess that the country can then throw in some subsidy to make product cheaper. But as far as the market goes in Ghana, whatever the international price throws at us, it is good to refine so that at least if you can have ships coming in and you have crude oil in tank, you can refine it. But it's not going to do much, to your price beyond what the international market will be dictating to us. And those dynamics are important for people to understand. You can refine all you want, but the price of oil is determined on the international market.
Thank you so much, Benjamin Boachi. He's Executive Director for Africa Center for Energy Policy. Let me wrap up with Dr. Riverson. Within the next few weeks, realistically, what should we expect?
Yeah, I'm so glad that Ben reported the fact that Nigeria stocks will be for supply security, just like I also said. But in terms of pricing, we all going to adhere to the international benchmark prices, and that is what we need to be discussing going forward. Ghana does not sit on the supply risk zone, as I said. If this war was supposed to be in Europe or UK, then we have supply security issues, because that's where majority of our product coming from. So what we should be looking at is to keep on monitoring the international benchmark prices to see the extent at which our pump price might hit.
Okay.
But let me also mention again that please do not panic. Let's keep our fingers crossed that this window will be stable for all of us, and by next week we should see the expected outcome of this war in the pricing window. And I'm saying that for sure, if the fuel price should go up to a certain limit, we should sit down with the government and see which of the taxes or levies that they could also subsidize for the consumer to benefit from.
Okay, thank you so much, Dr. Riverson Opong, CEO of the Chamber of Oil Marketing Companies. And that's how we wrap up Top Story. Up next is Newsnight.